Hello and welcome to Wine and Real Estate. And today I'm joined by my friend Gabriel. And Gabriel, I heard some crazy rumors that you actually moved to Costa Rica. Can you tell us more?
Yes, I did actually. I did. I moved with my whole family. So originally from Quebec, Canada, of course. And about almost 2 years ago now, we decided that we needed a fresh start. We wanted to see something and do something different. The cold was not for us. We've had up to here with the cold, so we decided that where can we move that it's something that is fairly hot, of course, but also good for my kids. So I have three young boys, and we decided to sell everything in Quebec, house, all our belongings, everything else. And then we just picked up and left with 15 big suitcases, 10 small suitcases, probably like 10, 15 bags also. Jumped on a plane and then moved to Costa Rica, which, we've been here for a year and a half now. Well, a little over a year and a half.
Welcome to Wine and Real Estate, the podcast where we drink wine, we have fun, and we learn about real estate investing. And now let's get to the wine and the real estate. That sounds amazing. And that's just a dream for most people. They're like, how can I get rid of everything and actually move this stuff? So you actually took suitcases. That's interesting. Most people get some sort of container. I looked into it. It's way too complicated. I'm like, just chuck all that stuff. I don't care. But the suitcase part might be a good mix. So some airlines allow you to bring more than one or two suitcase per person, I guess. Or
To be honest, it was expensive. I think it
okay.
cost us, quite frankly, I think it was something like $3,000 or $4,000 worth of extra weight and extra suitcases. But
Okay.
for us, the biggest point was more the fact that we preferred paying a little more because
Yeah.
when we got there with I have three young boys. So at the time, my youngest was 2 years old. So obviously, we needed like his toys, certain pieces that he's very
Mm,
attached to. My other boys also, they're at the time they were 4 and 5, so very very close in age, but they need their little um like a point of a fire. So sorry for the expression, but
yeah.
they need that anchor to this is it reminds me of home, even though we're moving around, keep a stability in their lives. So there was a lot of that
Wow.
also bringing down.
Very smart move. And Gabriel, you do something really interesting. So, as many of my listeners know, I love Costa Rica. I love investing there. And it's a great country, but most people hit a bit of a financing wall very quickly because for the most part, it's cash, or maybe the owner will do financing, so some sort of vendor take back. You can use registered funds. Some people know about that, HELOCs, lines of credit. But what if you don't have any of those? You come into play and you have something really cool that you've set up. If you could tell us more.
Yeah, no, it's one of the biggest hurdles. Obviously, is the fact that it's a very cash society, which is really great
Yeah.
in many aspects, but in other aspects, when you want to, especially as investors, we want to be able to leverage what the banks offer, what the regular Canada, US. You go all the way up to 90% or 95%, sometimes even 100% when in like special
And cash
situations.
back in the day.
Yeah, exactly. And regardless of the interest rate, if if your math is done well, at the end of the day, the investment is worth it. But the biggest issue here is the fact that you know the banks are they're very scared. They have a hard time opening up their portfolios or opening up the bank, I guess we could say, the vaults, because the reality is that expats, generally speaking, and once again, generally speaking, don't necessarily have a tie to the country. So this is how it was. If you go back like 5, 10 years ago, the reality is that the expats would be here. They'd be here for a month or two or three. Some of them would relocate, but the ratio was very, very small. Versus now, people are flocking here because of many aspects. So there's obviously the regular COVID chat that we keep on hearing, but
Yeah.
there's also people are looking to diversify. People are looking with the nomad visas that have been opening up across the world. They want a place that's safe, especially if you have kids or even young kids like myself. So the options here are plentiful. And then they always, like you just mentioned, hit a hurdle when it comes to the financing. So what I did here is that I partnered up with a couple banks, and we're often tagged as mortgage brokers, but we're much broader than that. So we have a couple different financing options, whether it's just a regular mortgage or refinancing with the bank. I have a couple contacts, of course, in the private lending space for sometimes people need to access the quick cash for a year or two, just to finish off a build and then resell it. And then there's a couple other programs, just like you said, like you were mentioning, Francois. Some clients can use their RSPs if they're from Canada, or the 401ks. We have a
Yeah,
couple
the
different
US.
partners that we help facilitate that. We're more the facilitator, so we just take the step back when it comes to that, and we just help them realize the whole transaction here in the country. And then we have another program that is, I like to say, it's not as sexy, but sometimes a less sexy program for one is actually a really, really great program for another.
Yeah.
So it's like Costa Rican government-backed mortgages. So it used to be for low-income families here in the country, and eventually the government decided we just open it up to anybody and everybody. So the entry point is very low. It's, Francois, do you have a passport? Yes, you're approved. But
Wow.
the upfront fees are
Are high.
a little higher, because we have to go through two different vetted by the government partners to be
Oh,
able
wow.
to access that program. So, but yeah, I mean, it's going really well. I mean, people are still a little surprised and shocked, because they've been told for the last X amount of years or
No, no, yeah.
generations, no financing. But it's not no financing. It's just, here, as I like to tell people, it's not what you know, it's who you know. So when you connect with the right people, Francois, you walk into a bank, you say, I want a mortgage, they're going to tell you no. But then
Nope.
if you talk to the right people, then they're going to tell you yes, 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 but, and then they're going to pull out 22 pages worth of exceptions and rules and this and that. And then when you talk to somebody else, then you're going to realize, oh, wait, this guy already has the process all streamlined, AKA our business. Because that's what we do. We just help streamline everything so that we facilitate when it comes to paperwork, languages, pre-approvals. Different banks have different rules. Some of them are more. The evaluation is based off of the credentials of the client, so your credit score, indebtedness ratio, and so on. Versus we have another bank that we deal with is more based upon the project. So
Okay. More commercial style. The
right.
project itself qualifies versus your income, especially if you're leaving Canada or the US, your income might actually disappear for a little while. So that would not be good if you needed to qualify. I think something else a lot of people are facing, and I invest in several countries, and many other Latin countries do have financing, but Costa Rica is a more conservative option, I find. And that's why you're not seeing that big housing bubble over there, because as you mentioned, Gabriel, earlier, the properties are paid off for the most part, so they don't have much leveraging or mortgages on them. So it creates a very stable environment. And even if you do get a mortgage or a loan, you're a rarity. So again, that's also quite a bit of safety for the person. Can you tell us how this is structured? Because it's done very differently. In Canada, we're used to it's a lien on the house and that's it. But it's not quite the case in Costa Rica, if you don't mind sharing.
Yeah, no, of course, and you're totally right. It's a different system, different methodology. It's much more stable because let's be honest and frank. I mean, the country, just for living in Costa Rica, if you don't make a minimum of a certain salary or a certain income somewhere or something with the money coming in somewhere, at the end of the day, it's an expensive country. I mean,
Yeah,
I
it's
call
not
it.
cheap at all.
Europeans oftentimes refer Costa Rica, it's the Switzerland of Central America. So,
Yes,
and
I've heard that.
they're right. I mean, they're totally right. I mean, the import taxes and everything else. But by doing that, by the government, by doing that, on the flip side, though, is the fact that, like you mentioned, Francois, it brings a lot of stability, because people that are arriving here are coming down with either a lot of cash or because they have access to cash somewhere in their home country. So it's very securing. I mean, it's very, if I take 2 seconds, like the colones, which is the local currency here, is gaining immense amount of
I
strength over the
know.
last 2 years, which is great for
The
like
locals.
stability wise. I mean, it shows that we have a very stable economy. On the flip side, it kind of sucks because the Canadian dollar or the US dollar versus the colones has a lot less buying power, but
Yeah.
it brings a lot of stability, so it's good. To tie that into like the mortgages, just like you mentioned, we have some banking partners that will follow the exact same rules like in Canada and the States and elsewhere. So they're gonna evaluate the client, evaluate the property, put a lien on the property, and then that's it. That's all. Versus our new methodology, I guess we could call it, it's kind of like in the private lending space, whereas a private lender, sure, who the person is in the background, but in reality, a private lender is where's the project, how much is it, who's actually going to be managing this, what's the market, et cetera, et cetera. So 80% of the eval is going to be done on the project, and what we do is that we take just basic information, where the property is, how much the property is going to cost that you're purchasing, how much are you looking to get financed, and so on and so forth. And with the basic information at that point in time, we'll be able to send that to the bank. 24 hours later, max, we get a pre-approval or rejected. And if it's pre-approved, at that point in time, you're guaranteed to get a mortgage. But we just need to make sure that we send an appraiser, to appraise the property. And this is where a lot of people aren't necessarily used to it. So because you don't know as of day one, it's not like I walk into the bank and I say, hey, Mr. Banker, how much can I get? This is my credentials. Okay, you can get a $500,000 mortgage. Go buy what you want. Here, it's the other way around. So where's the property? It's here. Okay, you're pre-approved. Now we send an appraiser, make it just easy numbers so that we can talk numbers. You're purchasing a property, $500,000, and then that's the purchase price. The appraiser goes out, comes back and says, you know what, it's worth 400 as an example. And then based off the LTV of the different banks, so some of them are at 50%, some of them are at 70%. It's going to be, example, 70% of that 400,000 and not 70% of the purchase price.
Yeah, that's it. That's a big difference.
So when we, relatively speaking, when we look in like general ballpark, I mean, if the purchase price, usually you're going to get between 40 to like 70% finance of the purchase price. Depending, is it a new construction? Is it an older build? Depending on the region and so on and so forth. So those are, high level, the general guidelines that people are not used to, but it makes it for a very nice program because at that point in time, it's not based off your credit score. So, we get the project pre-approved, we send the appraiser comes back, you sign all the paperwork, the property and the incorporation will be held in escrow. So it's not tied to your credit score. So there's no risk towards the investor, if ever, which would be a little dummy. But if the investor or the purchaser were just, you know what, I'm done, keep it, I leave, well, then the property is then going to be obviously repossessed by the bank. But if ever you were, as a person, Gabriel in Canada goes bankrupt and it's like, oh my gosh, it's just a very bad situation in my life. Well, as long as the payments towards the property in Costa Rica keep getting made, it won't get affected. So that's something that's key too.
No, and it's also a great option for a lot of Canadian and US investors that have gone the residential route for mortgages. Like you can get up to about maybe 10 if you push the boundaries in residential mortgages, and then you can set up corporations, roll them in, get commercial financing and all that. But usually you start kind of getting tired of that. Yes, you can go much bigger and do different things, joint ventures and all that. But if you're looking to diversify, you still have money and credit, but you're kind of at that maximum now. You have so many mortgages. Why not look at Costa Rica and enjoy it? And it can be a business income, business expense to come and check out the property as well. You're earning some US income. You could also earn colones. There's even banks. I know Scotiabank, you can get all three currencies in one bank account. So Canadian, colones, and US in one account, which is kind of cool if you want to diversify more. Can you tell us more about the trust as well? Because I think a trust holds the property with you, so you kind of co-own it until it's paid, or that part I know is less people are less familiar with.
Yeah, no, it's a good question. We use the name is BICSA, so BICSA. Huge trust across Central America. They have offices in most of the Central American countries. They're also a bank here in Costa Rica, but also across Central America. So we wanted to make sure that there's putting things in trust sometimes, especially if it's a small trust or you're not sure, it's always a little sketchy. Let's put it that way. So we wanted to make sure that we partnered up with a big player so that it brings a lot of security. And they are a bank, so they have obviously they don't lend per se, but to expats, but they could maybe eventually if they see with time, maybe probably in a couple of years, they're going to say, okay, you know what, guys, we want to be on board.
Yeah, we're interested. Double dipping.
Always, right? That's how it's. That's how it should be. But some banks are very, very scared, so they prefer watching on the sideline, and then once the proof of concept is done, and we're proofing now. I mean, the proof is done. It's more the fact of they want to see big volume. So there's a difference between $10 million worth of, mortgages and refinancing versus $200 million. So
Yeah, or a
we'll,
billion, or
so that's with time that we'll see where they go. On the flip side, though, the trust, is just like putting a lien. It's more the fact that if you're 1, 2, 5, 10 partners that owns the incorporation, it doesn't really matter. The incorporation will be held by the trust, and all the payments that you're making towards your mortgage are going to be flowing through your trust and then given to, example, our banking partners, Banco Nacional.
okay,
So
so
that's how the
you're
flow goes.
managing the flow of the money. Okay.
Correct. So that way, we make sure, because the biggest issue that we have is the fact that here it's not like in Canada and the States or even in Europe. There's no direct debits. So it's not like, oh, you know what, my monthly mortgage payment is going to be taken from my RBC account or, my whatever bank account that you guys use. At the end of the day, that's not the case here. Here it's, okay, wait, it's the first of the month. I have to make the
pay.
payment.
Yeah.
So that's why here there's always delays, and it's, it might take them 3, 4, 5, 6, 7 weeks before they realize that, oh, wait, Monsieur Francois didn't make his payments. Obviously, hence the reason that being an escrow is much better than having it in just having a lien on it, because here, putting a lien on a property, if you're lucky, maybe in 6 months you'll get the house. If you're, for whatever reason, if you're unlucky, it might take 18, 24, 36 months before you get it.
That's long.
And I mean, who wants to bleed that much amount of money? A bank or a private lender,
No.
in any case, nobody wants it. So you can make it easier in the rules and in the contract and this and that. But the reality is that if ever somebody raises a flag, something happens, yes, I have a lien on it, but I want to put a stick in your wheel, and the jurisdiction, the law here, and like the process, it just takes forever. So it's you're not going to go to court in like 2 days or 2 months. You're going to go to court in like 6 to 12 months.
Wow.
Before, and that's if anything gets settled at that point in time. So that's something that needs to be taken into consideration. So by having it in escrow, much easier, because removing the lien, you don't have to remove anything, because then it's just released and the trust is then dissolved. It's nice also because it's a hard cost, meaning that if you're opening up an incorporation and a trust, it's one fixed cost. So whether you're borrowing $50,000 or you're borrowing $100 million, at the end of the day, that fixed cost is the same. So sometimes it sucks a little bit if you're borrowing $50,000, but for a regular, let's say $200,000, $300,000 mortgage, it makes a lot of sense. Versus putting a lien on the property here is actually a percentage.
Yeah, so that's the scary part. A lot of people think owner financing is great, but there are hidden costs. Can you explain a bit how that works?
Yeah. I mean, it's the percentage. Well, the closing costs, regardless of whom you're dealing with, usually, I'm generalizing, of course, going to be between 4 and 6%. So that's pretty much the same. Once again, generalizing, of course, anywhere like Canada, States, or here. But the thing is that if you get like private lending or so on and so forth, or if you go with a regular bank, obviously you're the one that's going to be paying the registration. And to give you an example, like a hard number, when I how much was the amount? It was around $300,000, if I'm not mistaken. So I one of my first mortgages here was $300,000 that I did alone, and it was the lien to put on the property, all expenses included, with the lawyer, was around $4,600.
Whoa, okay, that's a nice chunk of change.
and then you have to remove the lien, which is a couple $100 also. So it's not like in Canada and the States where it costs you a couple $100 and then the lawyer fee is like a couple $100 and then
you're done.
It is what it is. Here it's so when you have a 4,600, let's say all inclusive is like $5,000 ish for a 300K loan. That's going to be for 6, 8, 10 months because it was a construction loan. I mean, for me it doesn't really matter because it's the client that's paying it. But the reality is that as a client or as the person that has to pay it, you're already $5,000 in the negative.
It's hard to offset that quickly. If it was over 10 years or 5 years or 15, then that's fine. But that spread is gone. Wow. And a quick question, Gabriel, as well. So a lot of people want to buy in corporations. If you now have this trust, do you still need to set up a corporation? or how does that work? And that's a self-serving question because I have a deal as well.
It is. The thing is that it's the here you cannot hold. Well, you can, but it's just because it doesn't make any sense because you are then liable for everything. So the incorporation will a new incorporation or an LLC, depending on obviously what you're looking for. So an SRL here or an LLC. At the end of the day, either or you need to have it created to then hold the property, which will then be held in escrow because
Okay.
you can have your property held in escrow like personally, but then
Good.
you are liable also as a person. And if you have 5 properties that are all personally
They have
registered,
access
or
to everything now. Okay.
it's just not worth it.
So you set up your SRL, which is an LLC, which is not recognized by Canada, the CRA, the LLC, but well, there's no tax treaty anyway with Costa Rica and
Yeah,
Canada, so that's a whole different
yeah,
story.
that's
But you set up that corporation, and then that corporation, in essence, gets that loan held in escrow on the property, and then you make your payments. And amortization is 15 or 20 years, I think.
we have 15, 20. We're currently working for better terms and better options because when we started with the banks in the beginning, it was 15 years hard for all the
Okay.
banks. It was 50% of the LTV for all the banks. So now that the banks see that we're generating a lot of interest, a lot of leads, we're closing on a lot of clients. They're seeing obviously, it's a win for the bank, it's a win for the client, it's a win for us. So at the end of the day, now it's just making sure that, okay, now this is the regular package. What can we get more? And then some banks are a lot more friendly, I guess we could
Yeah.
say.
And some are
they're
not.
open. Yeah, so it is what it is. So, but at the end of the day, yes, 15 years. Now we have all the way up to 20. We're looking to freeze the interest rate also all the way
Oh,
up to the
great.
20 years. It's not there yet. Here, the interest rate is variable regardless of the bank. Some of them it changes every 3 months. Some of them is every 6 months. So it depends. And the interest rate, it really depends on the bank because you take, for example, Banco Nacional, that is state owned. The prime rate at which they borrow is obviously much lower than the other banks that we use that are example from Nicaragua or elsewhere that they have a foothold here, but they don't borrow. The prime rate that they borrow at is much higher than the state owned. So uh, you know Banco Nacional, for example, can be anywhere between 6.5 and 7.7 ish, something
Okay.
along those lines. Whereas the other banks, most of the other banks, they start at 8, 8.5. I see
Mm,
some that are between 10 and 11. So,
wow.
but all of them have their advantages and disadvantages, right? I
That's
mean,
it.
sometimes a 10% is worth it because I'm only keeping the mortgage for 4 or 5 years because that's the plan, and then there's no early reimbursement fees, so it actually makes sense. So once again, it's a case by case.
Yeah, and what kind of projects are you financing? So I know personal homes, condos, obviously, but do you go beyond that if I wanted to build a hotel or a resort or
Yeah, yeah, most definitely. It's just a time frame at which the disbursements are going to happen. Obviously, it's going to be longer if you're more on the commercial side. But whether it's just regular mortgages, a bank, a construction mortgage, whether it's a condo, whether it's a new construction or existing, we can do anything and everything when it comes to those ones on the residential side. The commercial side is a little trickier just because the time frame, you're going to be between 2 to 6 months, and 2 months is actually like very, very fast.
yeah.
You're more around like the 6 month ish before everything's actually approved and before you actually see the first dollar come in. So it's and I'm talking like example, you're building a 20 or 30 unit condo
Yeah.
unit. So it can be done. The terms obviously are very different. The analysis is very different. The banks are more, it's like a special division, just like a commercial, mortgages in Canada and the States. But they're just, funny segue, I guess, is like I tell people, there's 3 speeds here, right? So there's slow, slower, slowest. So pick one,
Almost
you're gonna get,
stop.
yeah, yeah, almost. That should be the fourth one, but you're correct. That's so. I mean, with the banks, you have slow, slower at times, but most of the time it's going to be slowest. So, you have to be patient, and they're going to ask you. They're going to be super intrusive on everything, to the point where the escrow accounts are going to be asking you, the funds are from where you borrowed it from mommy and daddy. We need to see
Yeah,
their accounts, and then daddy and mommy borrowed it from auntie. We need to see her bank accounts. So it gets pretty intrusive, but
it really
you
does.
know
That's one thing is people don't, even if you're buying cash, people are not aware of that. They think, oh yeah, I'm using a line of credit. Perfect. I just went through that with my uncle who I sent to Costa Rica. He's like, oh, I'm using a line of credit. And then I saw the questions he was getting from the escrow company. Where does this line of credit come from? He's like, a refinance. Okay, well, prove the refinance. Okay, the refinance was from my home. And then, okay, well, how long have you owned the home? Show us the mortgages. And it just went on and on and on. And then he had a deceased partner he had to show, and they go very deep. So, again, that's good though, because it's safety. There's no money laundering or very little happening. In Canada, everything is checked kind of digitally, so we don't notice that. That's why they only look for 30 or 90 days, depending on the bank. But here, yeah, in Costa Rica, they go much, much deeper. That's great. So, Gabriel, what's the name of your company if people want to get a hold of you and find out more?
Yeah, Central Capital Solutions. So right now we're based in Costa Rica. It's our home base, of course. Little tidbit. Eventually the ultimate goal is to be able to service Central America. We
Wow.
have a couple different partners that we're discussing with to be able to expand. But right now Costa Rica is our main point, just to get everything properly set up, and then eventually, we'd like to service between Mexico to Colombia. So that's a good. It's a big market. There's a lot of people, but in reality, you need some strong, les reins solides, as we say in French, right? So you need to have a strong backbone to be able to hit those different markets. So
Yeah.
if you go central ccs.financial, so www.ccs.financial, and from there you can start an application. As soon as it's done, you'll receive, most of it is digitally done. And then once you complete your application, somebody here internally, sometimes it's me, sometimes it's going to be some of my colleagues or some of our agents. They're going to connect directly with the person that finishes application. Or if you have a question, feel free, info@ccs.financial, and we'll get back to you and see what your objectives are in the short, medium, long term, and then we'll give you the rundown of the different programs that we have, and we find the best fit for you. So that's
Yeah,
what we
it's
do.
amazing. And like you said earlier, it is super quick. I know I sent an application and a day or two I had my numbers, which was shocking. Here it would take a while. You go through the ringer and then, oh, okay, we're gonna approve this. Especially if you go commercial, that takes forever. I know it sounds similar in Costa Rica. Residential is okay. And that's really interesting to know that mortgage payments are like a bill payment. In the US, I've experienced the same with TD Bank, of all places. The mortgage, like, oh, you have 15 days to pay it, it's due. Okay, I just choose when I pay. Great. Wow, I've never, which is very risky. In Canada, it's automatically withdrawn, and that's it. You can't, well, you could skip a payment, but it's not ideal, not recommended. So, Gabriel, maybe just before we wrap up, what's your background? Because I think in Quebec you were in a similar work area, like you did mortgages or private lending or something in Quebec.
Correct. I was it's a family-run business. I mean, been in the lending space for probably 15 to 20 years. I've been
Okay.
part of the company for, I always forget, but probably like 8, 9 years now, or something along those lines. I wasn't really client facing. I was more in the back end for their systems. I love the optimization. I love the systems. I love growing businesses. Putting order in the chaos, as we like to say. So, but yes, been in the lending space for a good solid 8 years. And then when I moved down here, the first business I opened was the lending, private lending, and then segued into so many people were asking me, Gab, I want a mortgage. So I was like, I can't freeze $250,000 for the next 20 years.
No.
So let me figure out how we can crack this, as I like to say, crack this nut, and just finding the right way of doing it. And after 72,000 hoops that I had to jump through, it's not perfect yet, but we're getting there. So
Quite good. Well, congrats and all the best on your continued success. I can't wait to meet you in person later maybe this year, early next year, and see what we can accomplish. And thank you so much for sharing your knowledge with our audience. And pura vida.
but I did that. My pleasure, my pleasure. Thank you for having me on. And yeah, when you come down, we'll definitely, the wine and real estate. We talked real estate. When you're going to be down, we'll have the wine together for sure.